We're simply, China is ratcheting up the pressure. They have been doing so sequentially now for months, and in most recently, almost once a week. Of course, the famous tweet, infamous tweet, maybe the better way to put it: wine, lobsters, coal. This is yet another, and the latest in a string of actions taken by the Chinese to send us a very, very clear message, and one that has a very serious financial sting for those companies involved, those commodities involved. This remains, I think, it's $14 billion is being talked about for the coal industry. Iron ore, of course, the big watch out. The general consensus is that China won't, because they need our iron ore too much.
Yeah.
I dare say that might be a little bit too optimistic, I have to say. Look, I'm no prognosticator, I'm no forecaster, but I have to say China has shown absolutely no interest in worrying about its own financial circumstances, other than wanting to send us a very clear message and make us hurt. I think we're naive to assume they won't. They may not, by the way, but to assume they definitely won't do anything on iron ore, I think would be a mistake.
But now they're pivoted. Like China's going to, Indonesia, Russia, preferring those options for coal. The issue for them is that iron ore. I mean, they had the Brazilian option, but that's not there for at least the next 6 months or so. So Australia is just about it, which may well help us in the end.
Yeah, look, I think it will on iron ore in particular. I mean, I guess the reverse, it depends on what industry you're in, because, of course, if they can't use iron ore, then everything else needs to be done to make that pain felt, given that iron ore is so particularly large as an export industry for us and an import for China. And so if you're not going to be able to touch iron ore for a little while, you're going to go everywhere else you possibly can to make us feel that pain. It's a horrible situation to be in. Of course, no one likes it, least of all the Australian government, but it is a circumstance we find ourselves in with, frankly, not a lot of light at the end of the tunnel. I'm an optimist by nature, mate. I'd rather talk about something nice and positive. The simple reality is right now we haven't found a way to deal with China to get them off this particular warpath they're on.
Well, we have been enjoying the wave that is iron ore, and it's definitely going to help the MyEFO numbers this week. And there's already been some indication that the budget bottom line will be $3 billion better off just for the next financial year.
Yeah, phenomenal. That's really, really great news. So the key positive here, iron ore continues to just go higher and higher. The mine is doing very, very well, of course. But yeah, the budget will also do very nicely. MyEFO looking like a pretty good set of numbers, only a couple of months after the budget, the much delayed budget, of course. At the moment, the unemployment number looks like it'll probably come in, the forecast at least, lower than the budget number. Iron ore revenues, of course, higher. And the good news, of course, across the whole MyEFO, across the whole budget update, is that we've got much less in the way of unemployment. That means more tax revenue coming in. Again, higher iron ore prices are also good. To be fair, $3 billion in a $100 billion plus stimulus package is not really going to touch the sides, but it is a really nice indicator. Let's be positive for a second. A nice indicator the economy is getting back on track faster than most of us dared hope, and certainly than the government forecast only a couple of months ago.
Hey, just finally on the local markets, Afterpay continuing to be a thorn in the side of investors who don't have any Afterpay shares. It's now at $110. Scott, I remember talking to you several months ago. It was about $40, and I thought, there's no point. It's not going to go any higher than that.
Right. And it was $8 in the middle of March, right? So, I mean, this has been a phenomenal year for Afterpay shareholders, particularly the second half of the year. Going to join the ASX 20, which is phenomenal if you think about how small Afterpay was only a couple of years ago. The growth has been phenomenal, knocking IAG, the Insurance Australia Group, out of the ASX 20 and taking its place, as you say, now bigger than Coles. This is a phenomenal success story. Now, I should say, of course, no guarantee the share price stays there, so we need to be a little bit careful. But as you say, mate, a few months ago, we said $40 might have been about as good as it gets, and it's certainly, 2.5 times that. So it's not the stock you want to be shorting, put it that way.